Let's move on then. Let's talk about a couple of stocks. As promised, I think we have Siddhartha Khemka who joins us on the show. Hi, Sid. Good morning and good to see you, Ben. Well, let's focus on a couple of stocks. The India-UK FTA, well, that's a move forward. And that'll be good news for a couple of alcohol players, namely United Spirits, because it'll help on volumes. Margins, it may not help, but volumes could move up from here on. So we'll have to see how that goes about. So your view on that. And also we had Gokul Das who joined us earlier today. They said there's $1 billion opportunity for Indian makers, to pull some share from China as well as Bangladesh. How do you approach both these two sectors?
Definitely. Good morning, Nigel. So good to see you. I think that's a big positive news. After many years of negotiation, finally India has managed to get the free trade agreement done with UK. And looking to increase the trade over the next few years. So I think one of the biggest sector which will benefit definitely is the alcohol beverage segment. The reduction of import duty from about 150% to 75%. We believe should lead to about a 7.5% benefit at a consumer level. What we see is that customs duty is roughly around 15% of the current MRPs, and we believe that mostly these companies should be passing on these benefit to the consumers, making these premium brands and the Scotch whiskies making more affordable and to gain market share. So definitely, I think in that space, United Spirits is the largest player. There we could see a sharp growth or a good growth and market share gain in the premium segment where your margins are much better. So overall volume and value growth through enhanced accessibility of premium products, improved cost economics, both for the import of some of these raw materials plus the finished goods. So overall, I think that is pretty positive. Overall, for United Spirits, also we believe that the consumer trends in upgrading and the increased frequency that is driving good growth, and United Spirits is well positioned to capitalize on this large opportunity of the alcohol beverage industry in India and as an overall. So we expect margins to remain healthy and sustain in the range of 17.5%, and see that United Spirits could be a big beneficiary of this UK free trade agreement.
Siddharth, hi, morning. Wires and cables electrified this season, right? All the stocks have done well. Everybody's come out with good numbers. And KEI, I think the growth rates are higher than even the others. Polycab and RR Cable. Do you like any of the stocks?
Yeah, morning, Surbi. I think yes, you can say a hat-trick in the sense after RR Cable, strong numbers and pretty strong commentary. Polycab followed through, and then KEI. So we like the space. We believe that post the correction after the news flows of both Birla Group entering into the phase. Adani Group did a joint venture, but the details are not yet out of what the plans are, how much and when the plants would be. So to that extent, I think the completion is still 12-18 months away. Until that time, we see strong growth recovery in this space. RR Cable is something which has given out strong outlook in terms of 18-20% growth in the cables and wires segment, 25% growth in the FMEG segment. I think that is something that could be the outperformer going from here. Valuations are pretty comfortable, or you can say among the three, RR Cable is the cheapest in terms of valuation at about 30 times compared to about 35 to 38 times for Polycab and KEI. Polycab is something that we continue to like, is a market leader, has the most diversified product profile. And now with KEI also giving out with strong numbers, I think the space should do well. But what we like, A, Polycab because of its market leadership, and B, I think RR Cable because of its comfortable valuation.